What's going on, guys? My name is Matt Pinnock. I'm a realtor and investor here in New York and New Jersey. I'm with Lifestyle International Realty, and I'm here with my guy, Frank. Frank, say what's up, man. What's going on?
What's going on? Yes, so my name is Frank Pinho. I'm with Paramount Residential Mortgage Group. I am a mortgage lender here in New Jersey. Can lend in 49 to 50 states, all but New York. And it's a pleasure to be here, man. How you want to do the intro?
Frank, my brother. We here, we live.
Yes, definitely. Yeah, so, I think that we just, on a couple different conversations, wanted to get together and just kind of discuss for the people, for the viewers, for people that might be interested in working in real estate or purchasing real estate or investing in real estate, whatever the case may be, just what it all means, how it all works, and
how it all ties together.
Exactly, and how we kind of got started. So why don't you take the lead there?
Like Frank said, we're here to educate, we're here to inspire, we're here to let the people know everything that has to do with real estate. And so, the first topic that we can get into, maybe, how to go about buying your first property.
Yeah, definitely. So whether it is something that is owner occupied or non-owner occupied, maybe something that's a little bit more qualified as an investment property.
Yeah.
The home buying process is essentially the same. Now, there's no cookie cutter mold for, if you're going from one property to the next or however many you have, or you versus someone that that's buying a property. But anytime you're buying a property, right, you are offering a contract to the sellers that is portraying to everybody. Go ahead. I know you want to cut me off.
I was going to say, let's just take one step back and let's start it from the beginning, right?
Go ahead.
If you were, somebody fresh out of college,
Yes.
or maybe you just married, what would be the first thing that you would tell somebody in order to get positioned to be able to buy a house?
You got to figure out your budget. And that goes, it's a good segue into getting pre-approved and everything, but you got to figure out a little bit for what you can get approved for and how much you need in your back pocket in order to get your first property, whether it is owner or non-owner occupied. Owner occupied, that kind of BRRRR method, purchasing something, maybe it's a multifamily living in one unit, renting out another.
That's the smart way to do it.
Typical first-time home buyer, bigger pockets kind of style, right?
Yeah.
That kind of information's out there a lot. If we're tackling a little bit more so of that kind of mentality towards purchasing real estate, you got to figure out what you can get approved for. So shopping around to a lender like myself, and then maybe going to you as a realtor, your job is to find them the perfect property, find the client the perfect property. My job is to make sure that you guys can finance it. And that's kind of the marriage that is there in a working dynamic for our clients.
Got it. So what would you say, what would be an advice that you would give somebody that's like 30 years old, they're still renting and they want to purchase a property in the next 2 to 3 years? What would be the first step that you would advise them to do in order to start getting into position to be able to buy?
But before even getting pre-approved, they got to figure out what their monthly budget is for, how much is being allocated towards their Netflix subscription, DoorDash, stuff like that, right? Some kind of payments you're not going to be able to get around as a lender. Monthly payments for cars. Everybody needs a car to get around.
So their debt to income ratio.
Debt to income is the biggest thing, because car payments, student loans, credit cards, things like that, I have to count against you and against your monthly income, because those are debts that show up on your credit report that ultimately affect how much of your purchasing power is there.
Of course. Mm-hmm.
So that's first things first. And then the next thing is, how much money can we have saved away in 2 to 3 years? And again, part of that budgeting process to fund your down payment and your closing costs.
Okay.
Now, there's different programs there as far as down payment assistance and things like that, which is a whole separate ball game. But even then, you need to have that rainy day fund, knock on wood, the hot water heater breaks, or, you got a leak in the roof, something of that sort.
So we're here in the New York, New Jersey market where the average home price is about $500,000, $500,000. What would you say is a good starting amount that somebody should have saved that somebody should have saved before, looking to start, looking to get into a purchase?
Definitely. Well, in using the basis of a conventional mortgage, we'll just go with that one for right now, right? Mm-hmm. Conventional mortgage you can use as an owner-occupied or an investment property. Owner-occupied, you're always going to have a lower down payment. Minimum down payment on a $400,000 home is 5% for a conventional loan. That's $20,000. Okay. Yeah. So having that plus closing costs, maybe somewhere in the ballpark of, another $15,000 or so, you're looking at around $35,000 just to get into the property. And then no two properties are the same. So if it needs a little bit of TLC, making it your own, furnishing, things like that.
That would be ideal, right?
Ideal. And then,
because then you get to build your equity up.
100%, and finding how much the home is going to appraise for is a big thing. Nobody wants to be able to come to the closing table with extra money because the home didn't appraise for what it's worth.
What does that mean? What's an appraisal?
So an appraisal is a third party appraiser who makes sure that, one, you're not getting robbed on the property, that the contract that you're submitting as the bank and you as the purchaser is the right amount for the property.
Right.
But also that you're not over allocating money towards that property. So if you have what's called an appraisal gap, that means that the property isn't worth as high in comparison to other properties in the area. Same bed, bath, size, if it's renovated, not renovated, a little bit outdated, things like that. How much properties in that area go for.
So basically the bank won't let you finance $700,000 on a house that's worth $500,000.
Correct. You can, but you have to bring that gap to the table.
You have to
out
pay
of your own
cash
pocket.
Out of pocket.
Yes,
Makes
correct.
sense.
Correct. Mm-hmm. So avoiding an appraisal gap is, again, where having the right real estate team is to your benefit as a client. Because one of the things that I rely on someone like you for when we're working together for a client and they're purchasing the house is, what do the comps in the area look like?
Yeah, absolutely.
Because some of these realtors out there, especially in this market where New York and New Jersey, we've seen prices skyrocket in recent years, you're going to have very inflated numbers when it comes to how much to purchase a home for.
Absolutely.
So you're going to have things that go for over asking price. A home could be listed for $500,000. We've seen it plenty of times, I'm sure, with our clients. Homes can go for $575,000, $600,000, maybe even more if it's in a super desirable neighborhood.
Yep.
So making sure that the comps in the area, making sure that the comps in the area is comparable to that, and just using a different tense of the same word.
Yeah. Accurate.
Yes.
It's all data driven. It's public information.
Yep.
It's our job as a realtor and being in the real estate space to know what is driving the market and what are the actual real values of these houses that are being sold. And that's why who you work with really matters, because if you're not working with someone who doesn't know what's going on in the market, then you're just setting yourself up for failure.
100%. I think that kind of carries into, building the right real estate team for you, right? So not only do you have kind of the two front-facing people for our clientele when it comes to purchasing a home, obviously you, the realtor, finding them the home, me, the lender, making sure that they can finance it, but you have a title company, you have
attorney,
a real estate
inspector.
attorney. Yes. You want to touch on some of kind of those aspects?
So like I was saying, so you have your realtor, you have your lender, you have your attorney, you have your inspector, you have your title company. That's pretty much.
Appraiser on our end, thrown in there as well. Mm-hmm. So, all those things kind of culminate together to do their own jobs, but it's all a team effort. Everybody pulling on the same rope. Yep. And you're going to have the sellers and the selling agent and the seller's attorney, doing right in their fiduciary duty to them and their side. So everybody pulling on the same rope is really how we're able to make sure that we get to the closing table and everybody's happy.
Efficiently and smoothly. And, a team where everybody's on the same page, everybody understands what the ending goal is. Mm-hmm. That's a major key for the success of the transaction. So it plays a major part.
Yeah, 100%. Why don't we maybe take a step back into, how long you've been doing this, where you got started, how you kind of got from then to now?
Definitely. So I got introduced to real estate in 2017.
That was a crazy market back then.
Crazy market. I actually started doing rentals in the Lower East Side in Manhattan.
Okay.
Running around the city. And
you and Ryan Serhant. Huh? You and Ryan Serhant running around.
Yeah. So that's how I started. But I kind of was in and out from 2017 to about 2021, right around COVID, where I actually, had the time. Everybody had the time, COVID, right? Mm-hmm. Where I actually sat down and took the initiative to get my license. So in that first year or two, I did some business. I wasn't full time. I was still part time. Mm-hmm. The setup that I had, I was supposed to partner with one of my mom's friends. She had her own brokerage, and we were kind of supposed to work together. She was supposed to mentor me, but that didn't really work out. When COVID happened, she shut down, so I kind of was left on my own. From there, I joined another broker. I actually joined Keller Williams.
Okay.
Very great brokerage, super educational. They have all the tools and resources that you need as a new agent. And I took what I needed from there, learned, did some deals, and, I left. I moved on. And from there, now I'm at Lifestyle. Mm-hmm. I'm at Lifestyle now, Lifestyle International. Our main office is the Secaucus. Yep. and it's a great brokerage. Very investor friendly. Everybody there is, from investing to fix and flip to everything. Like it's a great place to be. So now my goals there is to eventually start my own team.
Nice.
I'm working on a couple fix and flips right now. We spoke
Yes,
about
we are.
that.
Yes, we are.
And I'm excited for this year to come.
100%. Yeah. No, what are you kind of seeing as far as, the tail end of that? You said the year to come. What are some things for yourself that you want to segment yourself towards that?
Like my goals?
Goals, maybe, where you see the market going, how those kind of intertwine together. And...
there's a lot going on, right? This year was just an election year. So, things are up in the air as of right now.
Good way to put it.
I think things will move positively next year for real estate.
Agreed.
With Donald Trump back in office, all that controversy, I'm not going to get into that. But I think it's going to be positive for the economy. I think so.
Yeah.
Based on what's going on. I don't know.
No. I completely agree. All we can do is maybe rely on past history, when it comes to how maybe the economy was when, this soon-to-be president-elect gets back in office based off the first term. There's always going to be different circumstantial kind of factors going in on that, right? So at least for all the other forecasts surrounding inflation, home prices.
Let's talk about the data.
Yeah, the data. The proof is in the numbers. Mortgage rates are suspected to and expected to come down. How much is kind of what's a little bit a part of how you touched on, a little bit up in the air right now. Inflation has not been getting under control the way that the Federal Reserve would like right now.
So I see they cut the Fed rates. Does that mean interest rates are going down, or?
So federal rate cuts does mean that it will be affecting mortgage rates, but it does not directly tie to mortgage rates. When the Federal Reserve cuts the federal funds rate, that is the rate of short-term investments that banks lend to each other. So when it comes to you or a client that is purchasing a home on a 30-year note rate, that is a long-term investment.
Yeah.
So you're going to have different numbers when it comes to the federal funds rate and the mortgage interest rate. It is tied together because, just like when the economy is doing better, if stocks are on the rise, typically a healthier economy means mortgage interest rates are a little bit lower. But, at the same time, if you have a high yield savings account, when you have inflation in the market and you have a high federal funds rate and you have a high 30-year, bond rate, you're going to get more interest on your money at that time. But when the Fed starts cutting rates, you see that high yield interest rate start to come down a little bit. That might not be so good for that investment, but it is better if you have money invested in real estate. So there's different allocations towards different assets, different income streams, if you will.
Yeah.
So it's all kind of relative. It all doesn't work in a linear line. Rates kind of come down like a kid walking down a staircase with a yo-yo.
Yeah.
So
I was all ready for that. I seen it all over social media. Rates coming down. I'm thinking rates is gonna drop 2, 3, 4%.
Yeah.
Thinking it's about to be lit.
Yeah, that was a crazy time. You had a lot of different economic factors there, kind of affecting that. And now we've seen for the past couple of years a kind of a correction to that.
Yeah. Because COVID things was just ridiculous. 200 over asking, 100 over asking.
Yep.
That was. So I guess like you said, like now it's like leveling out.
Yeah,
right?
It's a correction to that time. Now, that doesn't mean that, we want things to stay where they are. We want everything to come down a little bit and inflation come down as well so that affordability could be on the rise for the first-time home buyer that we were talking about, the 30-year-old that, just got out of student loan debt and things like that. What should he be doing right now to purchase a home?
Yeah,
things like that.
I seen the average home buyer nowadays they're saying 38 to 45.
Yeah. No, I've seen reports as high as 48. And you have 30-year-olds now that are relying still on their parents to kind of help them out with some bills or some things. The dollar doesn't go as far now as it did in our parents' generation. That's just a simple matter of fact.
Right? Like our parents' generation, they're getting married at 21, kids, house, done.
Yeah.
21, 22, 23. Now it's like, a studio bedroom is like $3,000 for a studio.
100%. 100%. I mean, my parents had me at 20 years old, and thank God I beat teen pregnancy and all that, because I don't know how I would be able to do that nowadays.
For real.
So, but it's a crazy time. But we are expected to have a better forecasted future. there's always going to be something that comes up where maybe, we don't know where that very well might take us, but still, the forecast right now is positive. And so long as we can cling on to that, so long as we could continue to work on those things one step at a time, I think that it's going to be a great real estate market for everybody coming up in the new year.
Let's talk about closing costs.
Okay.
What are some of the fees associated with purchasing a home outside of the initial down payment?
Outside of the down payment.
Yeah.
So essentially the down payment is for you alongside us as the bank to satisfy the purchase price for the seller.
Got it.
Now, for us satisfying that loan amount, hundreds and hundreds of thousands of dollars, now we have to get paid for the services and all the people that have a hand in touching your loan.
Got it. So a house that's $500,000, 5% down payment, that's what, 25, right?
Yes.
Out of the 25, what else? As I'm walking through the process, what else needs to be paid?
You can expect it to be around another 15,000 or so. Now,
what's that for?
That goes into escrows, title insurance that comes from the title company. So we can give a good estimate, but ultimately until the title company does their searches through the deeds and the township, making sure all that paperwork is up to date, making sure that nobody else has any ownership interest. If it was an estate of something of some sort of, passed down through generations, something like that. So title insurance is a big thing. You have your attorney fee. You got to pay your real estate attorney. That gets broken down into the closing costs. Got to pay your attorney. As well as prepaids and escrows. So prepaids are like your homeowner's insurance. Your homeowner's insurance policy, similar to like your car insurance. You pay that premium up front, and then each month you're paying to allocate for that premium for the year following. Mm-hmm. So you're always paying ahead. So at any time you can go and get, a cheaper homeowner's insurance, and then you get reimbursed out of your prepaid account, prepaids and escrows. So escrow account, your escrows, property taxes, you got to pay your property taxes. Property taxes are paid from each home on the block to the township quarterly. Even though it is broken down into your monthly payment to us with your mortgage, we pay the property taxes for your home to the township on the quarter. Because even if you had that same home and you had no mortgage on it, your property taxes would still be due to the township, to the county, each and every quarter.
So that's 25, 15. Mm-hmm. You got to pay for your inspection too. Definitely got to get the house inspected. That's probably like another 1,000. So where are we at? What is that? 40, 41?
Yeah, you're up there a little bit, and if you want to make the home a little bit more of your own, paint, TLC, the roof, if it needs to be redone, that comes up in the inspection report, something like that. Maybe another 5 to 10 is just good to have. Obviously, you want to outfit, we don't want to be sitting in our home in lawn chairs, right?
Yeah, definitely.
So, making the home your own, it gets to be a little bit costly, but there's different ways to help out with that as well.
So for a house that's 500,000, you need to have at least like 80,000 to 100,000 saved, it sounds like, because you don't want to be house poor, right?
No, definitely don't want to be lending to nobody, so that we got to be rubbing 2 nickels together afterwards, and things like that, right? Budgeting and allocating for that so that we can, even if we can really push on your debt to income ratio and max you out at a $600,000 home, maybe that's not the right place for you to be, especially if it's a starter home. If it's going to be your forever home, you're going to pop out a couple kids there, beautiful family, this and that, have, family over for holidays. By all means, you do what you feel is right.
How do you have a conversation with a buyer that's really set on, they're looking at a $600,000 house, and they're telling you, this is what I want. Mm-hmm. And you have to have the conversation, the uncomfortable conversation with them, saying like, hey, listen, it's probably just not going to work out for you. Like, do you have conversations like that?
100%. And I'm smiling and kind of giggling right now as you're asking that, because that always comes around the time when they say, damn, that payment's high. So,
after you already put the offer in, it gets accepted.
No, not with me. I'm trying to, especially when this for a fact too. When you schedule your showings with our clients, right? Our clients are sending those properties over to me. We're running all the numbers so that they know in their minds how much down payment should be, how much closing costs will be, and what that monthly payment will be before even walking in the door.
Yeah.
Because what's the point in wasting everyone's time if you're going to take them out on a Tuesday after work or a Wednesday morning or a Saturday or a Sunday on the weekend when they're going to go see a home, and then they're not going to like the monthly payment.
Yep, get hit with a surprise.
No surprises in real estate. And there's always going to be something that maybe, is a speed bump in the road. But if we can minimize those speed bumps and have everybody clear cut and concise all on the same page before even walking in the door, it just makes for a better experience for the home buyer.
Of course.
So, that's definitely something that happens. But yeah, to your point, talking about monthly payment is usually when we're like, okay, look, you can push up to that budget legally. You know, I could lend you that money. It's in the guides. The DTIs fit, but maybe where you want your monthly payment to be, and it doesn't have to be a monthly payment that's for the next every month of 30 years. It could be something where you're comfortable with the monthly payment enough right now, and as rates come down, we're going to watch the market. We're going to refinance. Yeah. We could maybe pull some money out and roll it into your next purchase. You start a little portfolio for yourself. It all depends on what the client wants to get out of investing in real estate.
That makes sense.
So, you know, no cookie cutter mold.
So we're going to take a quick question from the live. Johnny from Hackensack here says, how accurate are the Zestimates on Zillow?
Ooh.
Well, Johnny,
we could talk for an hour on this.
we can talk for an hour on that one, but I'm going to keep it short and simple. So Zillow doesn't have X-ray vision. They cannot see inside of the houses that they're placing these estimates on. Therefore, they cannot accurately determine the value of these properties that they're estimating. They can give you a ballpark of where the house, kind of what it's worth, but they can't give you an accurate estimate. That's why it's very important to work with a local professional that actually knows what's going on, knows the value of renovations being added into these homes, and can give you an accurate estimate of what's going on in the neighborhood. Zillow's cool, don't get me wrong, for whatever it's worth. You know what I'm saying? Like, you go on there, browse properties in your pajamas at home, set up tours, all of that stuff. But when you want actual local professional information and relevant information, you gotta call the Pinnock team, call me, call Frank, call somebody, call a local realtor.
100%.
Zillow's cool, like I said, but definitely you wanna talk to a realtor, local realtor for sure.
You wanna be able to work with the expert in that area.
Yeah.
Right?
Yeah,
like
yeah.
you're from this area, you know this area, you show up on those websites, you know, your social media is tailored towards it. It's because you know that area like the back of your hand.
Exactly.
So you can be able to give a little bit more insight than an algorithm can.
Facts.
You know, like the Zestimate is basically just an algorithm. I've seen it be off by drastically. But to some people, it's the letter of the law because, you know, if they haven't sold their home in 20 years and, you know, their mortgage is about to be paid off, they want to retire to Florida.
My house is worth $700,000. It said it on Zillow. That's not the case.
100%. 100%.
Chill out.
100%. You know, and everybody could kind of know, you know, a part-timer or somebody in their family, oh, when I bought a house, you know, I still have this guy's card, this and that. Maybe that's not the best person to go to, right? You got to be able to do your research at the end of the day.
Do your homework.
The reason
Research
why
is
we're
free.
here. Well, the reason why we're here is because we're passionate about this. You know, we have family ties to it. We're building our own portfolios. We do this. We live, breathe, sweat, sleep this every day.
Mm-hmm.
You know what I mean? Mm-hmm. So to be able to have that kind of passion towards our clientele, I think it kind of bleeds into our work, and it goes way further than just something that an algorithm or an app or Zillow can tell someone.
Amen. So, guys, that's a wrap. Thank you for tuning in. If you want to get in contact with us, our socials are below. Shoot us a DM. You know, like Frank said, you know, we are in 49 different states. Doesn't matter what state you're in. We can definitely help you out, answer any questions that you have.
Thanks for tuning in. If you guys have any questions about the topics that we covered today or anything else in regards to real estate, our social medias are below. Please reach out to us. We're always available to give advice. Doesn't have to be in just New York and New Jersey. Could be anywhere in the continental United States. We're going to be here and be able to refer you out, answer any questions. Hit the socials below.